What is going on, everyone? This is Andrew O'Connell with Pristine Capital coming at you with yet another market recap video. It is February 25th, 2021. Please like this video and subscribe to my channel if you enjoy this content, and I will continue to make it for you. Today we're going to go over the violent price action in the indices. We'll go under the hood and check out our sectors and style factors, some of the trades I took, and then we'll wrap up some options order flow. But before we jump in, quick risk disclaimer, nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. And last but not least, do not YOLO your entire account into any one of my trades. So let's jump right into it. And let's take a look at what we saw today in the market. So we had the S&P 500 finish down 2.41% today, pretty big red day. The NASDAQ QQQ down 3.49%. We had the IWM small caps down 3.7%, and we had the Dow Jones finish down 1.74%. So pretty big red day of price action. And really to set the stage for what we saw today in the equities, we really need to talk about what's been going on in the Treasury market. And this is our 10-year Treasury note future. And really since the the beginning of the rollout of the vaccine and the hopes for reopening of the economy, higher growth expectations, and higher inflation expectations, the 10-year Treasury note has been increasing. And you can see here, this has been a very violent move higher in the 10-year. And there's a lot of convexity to this move, meaning in the bond market, there are certain trigger levels. And when those trigger levels are reached, you can get very quick moves. So what I mean is, like, you can see here, the 10-year Treasury note has kind of been trending lower, but you can really see that trend accelerate very quickly over the past 2 weeks. So yesterday it almost looked like, okay, bonds are very oversold. Perhaps we're going to get some sort of bounce here. Today was just a complete puke of Treasury yields. So we went from a 10-year Treasury rate at around 1%, and over the course of a few short weeks, it's gone from 1% to 1.5%. So while it doesn't really seem like a big move, that's a 50% increase in yields. And it's caused essentially like a re-rating and a ripple effect throughout the equity market. So a lot of these high duration sensitivity areas like, tech, especially the big cap tech names that are often seen almost as treasuries, there has been a huge sell-off in those areas. And, at this point, they are very oversold. This has been a multi-standard deviation event, but today was definitely, sort of like a climax of that move. So let's pull up the S&P 500, and I think what made this move very tricky, especially for myself, is that we had this day on Tuesday, which was like, okay, we sold off big. I talked about this in my recap video that this was essentially like a flash crash of these stocks. A lot of these high growth names. We auctioned into this monthly value area. We pierced below that 20-day simple moving average, and we ended up auctioning back up to essentially flat on the day here. So that was like, okay, the weak hands are out. We had the sell-off, et cetera, et cetera. Then yesterday we got a really nice green follow-through day. So it looked as though, okay, the bottom is in. We're ready to resume our uptrend. We have stimulus coming, all is well. And then today we actually auctioned up a little bit higher, got very close to the all-time high, and then really just sold off throughout the rest of the day. And this is, what I refer to as an expectation breaker, where the market is really set up for one thing, and then it just delivers you something completely different. So yeah, we can see here, closed not exactly on the lows, but you can see we closed within this monthly value area. So that's not a bullish close, and this intermediate term uptrend is definitely in jeopardy. So for that reason, I had to de-risk my portfolio. I took off a lot of trades today, and I'm sitting in a lot more cash than I had prior to today's session. So let's take a look. We're going to zoom into our hourly chart and let's take a look at what happened today. So today in the pre-market, there was a little bit of softness. We were a little bit red in the pre-market, maybe by like 3%. At that point, I was like, okay, no big deal. Let's see how things shape up today. And I was like, okay, we have this weekly value area low as our support area. I wouldn't be surprised if we get a test of that area. But you can see we started off on accelerating volume here. A pretty big spike. The one level that I have marked off on the chart is this 3880 level. I noticed this has been a pretty big psychological level in the market. There's been a high level of volume traded here, and it's functioned as a good line in the same level. So once things started to look a little bit more dicey, I was like, okay, this has to be my line in the same level. If we breach it, that essentially means that the uptrend that we just had, and really like this breakout that we had a few days ago, that has been violated, and now we're just resuming our downtrend. So when that happened and I saw that break, I had to take off a bunch of positions and really de-risk myself. The other thing that I was looking at is the options activity. So one thing that I like to do is I want to see are we getting capitulatory put buying in the market? Because a lot of times when market participants become more fearful, you can get a really nice snapback rally or can sort of put a bottom in the market. One thing I had looked at last night, it definitely was a little bit concerning, was if we look at this put to call ratio here, you can see yesterday it was essentially like a binge fest on calls, and the put to call ratio has hit some pretty historic lows, and it's trended at very low levels. We get these periodic spikes, but for the most part over the past several months, it has been a binge fest on calls. So that was something where I was like, okay, the trend is up. I see this in the background. And so I knew that, okay, we were coming into today's session against the backdrop of everyone having just loaded up on calls the prior day. And then also I was taking a look at the options order flow coming in, and I saw we were violating that support level, but I also saw that there was no interest in any sort of put buying. Of course, we did get the Johnny come lately put buying, after the close, people putting their hedges on. But earlier in the day, you can see everyone was just pounding the market with calls. So we had Apple calls coming in right on the open. Everybody was hitting these GameStop calls. We had a couple of put buyers in the morning, but nothing really too big. But yeah, you can see even at 10:45 when things started really unraveling, there wasn't really much in the way of participants purchasing, put options or any protection. It was just everyone loading up on, these speculative GameStop calls. So for that reason, I was like, you know what, I have to de-risk. I ended up taking off about 90% of my trading account today. And I just said, you know what, the market, if it really wants to trend down like this and it can't hold a rally, it just wouldn't make sense for me to stay in this market. I have to really protect my capital and protect my gains for February. So I was able to close out, a bunch of positions in my trading account. For long-term stuff, I certainly left that in the market, but I raised a little bit of cash. And we'll have to see how this price action shakes out. So, I'm curious to see tonight when the data comes out, were people actually purchasing calls or, puts, or were they just trying to buy the dip? Because that's one thing in this market. For pretty much the entire duration of 2020, it's been a huge mistake to buy puts. It's also was a huge mistake to sell any stocks. As you can see, ever since we hit that coronavirus low, look at what the market's done. It's just been absolutely incredible. And we've had those low rates sort of underpinning the rally. it's just been amazing. So I think at this point, a lot of players in 2021 are like, I don't want to make those same mistakes. I'm not going to be foolish and buy these puts and, hedge my risk and all that. So I'm starting to notice a lot more, I don't want to call it reckless behavior, but definitely bullish behavior, even during sell-offs, in the options market. So I saw all those things and I was like, we're breaching support. For all I know, tomorrow we could slice through, this value area and suddenly be revisiting this low down here, 3,600. Like, I certainly don't know what's going to happen, but I had to, take my positions off. And I think that one of the worst feelings is like when you have a book of risk on and you're sort of just like hanging in the wind here, where you're like, oh my gosh, I hope the market comes back, but the market really hasn't given me any indication of that. So yeah, let's take a look at these sectors and style factors. And it's definitely one of the toughest decisions to make, because especially like, you market sold off, a bunch of your positions are in the red, and the initial instinct is like, I want those positions to come back, so I'm going to keep them on. But you can really get into some trouble there, especially if this turns out to be like a deeper correction. It's the kind of thing where for myself, it just makes sense. I'll be in cash. Won't try to catch the bottom or anything like that, but at some point, I'll add that exposure back when things seem to be a little bit more constructive. Because, yeah, you can see these sectors, blood red across the map here. So we had all the leaders red. We had energy down 1.93%. Regional banks down as well. Home builders down big. Semiconductors, huge. And I'm trying to think of the area, or look at the areas that perform the best. We had utilities only down less than 1%. We had healthcare down 1% as well. Let's take a look at our style factors. And you can see, similar action here. High beta down 3.35%. Cyclicals down big. And our best performing style factors were the min vol and the defensives. So yeah, for today's trades, essentially it was me just stopping out of a lot of exposure. So even some of my favorite names, like Skills, I had to stop out of. Enthusiast Gaming, those are some names that I definitely want to jump right back into. But yeah, I was essentially closing out, a bunch of trades. So I closed out some Carnival. I tried some Disney at one point during the day as a scalp. Had to stop out of that as well. And I really just took a lot of it off. So really the positions that I have left, I have a couple of call spreads on that I can just let those, go to zero if need be. I have a butterfly in this name, SI. Let's take a look. And SI, I think, looks very interesting for if and when this sell-off, sort of comes and goes. That's the other thing. It's like, it's not like I think the market's going to go to zero or anything like that. But it helps to just free up sort of like your mental capacity as well by, just resetting the deck a little bit. That way you can make better decisions, in the future. So SI, I have a butterfly on this one targeting the 160 by 180 by 200 zone. And this one, it acted pretty well throughout most of the day during this sell-off. It's kind of sticking in this tight range, so we'll see what happens there. I had to close out. Let's see, I even closed out some of my common stocks. Yeah, so I closed out Enthusiast Gaming. I had a runner position left on in Curie. Closed out my Nanox. So yeah, a lot of these positions, like MG&I I had on with a nice gain as well. Closed out the tan that I added. So yeah, this was really me sort of resetting the deck. One thing that I did do into the close, I was able to observe the market a lot more clearly, just a little bit less exposure on. So I'm trying for like a little bounce trade, just as a small exposure here. So yeah, I took some SPY calls overnight. These are March calls, just trying these for a scalp, see if we get sort of like an oversold bounce here. But we'll see what happens. And then in terms of our options order flow, let's pull this up. So we already talked about this a little bit earlier where, not that much in the way of put buying earlier on in the day. But yeah, GameStop was one where we kept seeing repeat call activity. This is definitely, just some hedge funds that are trying to crush their other hedge fund buddies or, whatever. So they're really squeezing this stock higher. And you can see it closed up 18.5%. Closed towards the lows of the day, but, still finished green in a really red tape. Let's take a look. We had some PayPal calls going up, and that's definitely a stock that I like to buy the dip in. I definitely think when these sell-offs happen, you want to have a few go-to stocks where you're like, okay, this is my buy the dip stock. This is what I enter when I think the selling has kind of come and gone. We have some calls going up in TripAdvisor, and this is a travel name. One thing I definitely notice is that a lot of these reopening plays, are certainly holding up much better than tech. So let's see if we take a look at Trip. Yeah, closed down 12%. A lot of these stocks are really just decimated. But I think with some of these reopening names, this sell-off is going to present an opportunity to pick these up a little bit cheaper because they were definitely getting pretty extended here. But if you look at some of these tech names, we have Apple that is just completely on the mat. This thing is really struggling, and, the chart looks very similar to the 10-year Treasury chart where it just sort of has this big drop-off. And if we look at the heat map as well, you're going to see that these big tech names are really the ones that were lit up today. So Disney is another one that I had closed out the other day. I'll probably look for a re-entry in this one. But yeah, today for the most part was really just, okay, let's get out of a bad situation. This sell-off, we don't know when it's going to end or how it's going to resolve. So, for me, I wanted to take a step away from the market and really just protect the account. Yeah, and then I definitely think there's, some ways in terms of improving on, really positioning that way I can avoid some of these moves in the future. Because definitely one thing that I'm thinking about is with this SPY. This thing has sort of been on like a not so good trend for maybe the past couple of weeks. So I think definitely in terms of, adding exposure, even when we get that follow through day, really just adding exposure incrementally and not really going in with a full deck. Because I think if you come in a little bit lighter, it's a little bit easier to manage these situations. For me, it was like, I have to protect my gains for February, so let me just tighten things up a little bit. But I definitely think, there will be some opportunities in here. In the Qs, things look much more ambiguous. So if we look here, the Qs broke the 50-day simple moving average, tried to rally, and flushed right back down. So in terms of a trend, the Qs are in clearly they are in a downtrend. So they should definitely be interacted with as such. I know the primary response everyone has is like, okay, let's just buy the dip. And that's certainly been an amazing strategy for so long. I mean, look at this. Really, since the March low, when have you not wanted to buy the dip in the Qs? And even here, you can see the Qs undercut this 50-day simple moving average, and they still managed to do just fine. But I definitely think, caution warranted here for these Qs. If you are going to take a position, just make sure you can afford to lose it, or make sure that you're a long-term investor. What you don't want is like entering it as a trader and then becoming a long-term investor for sure. That about does it for this market recap video. Hope you all had a good trading day, and I will see you all tomorrow.